Welcome back, everyone. We're diving into the world of quantum computing today, specifically D-Wave Quantum Inc.
Oh, D-Wave. Always interesting.
Yeah, they're certainly making some moves. We've got their latest quarterly report here, the Form 10Q they filed with the SEC. It covers the period ending September 30, 2024.
Sounds like we've got a lot to unpack.
We do. We'll be looking at their financial performance, the hurdles they're facing, and of course, what the future might hold for them.
Let's get into it.
To start off, can you give us a quick rundown of D-Wave? What makes them stand out in the quantum computing landscape?
Sure. The big thing about D-Wave is that they're the world's first commercial supplier of quantum computers.
Wow, the first. That's pretty significant.
It is. And they're not just focusing on one type of quantum computer either. They're developing both annealing and gate model quantum computers.
So, two different approaches to quantum computing. Why the dual focus?
Well, annealing quantum computers are really good at solving specific types of problems, like optimization problems.
Okay, so things like logistics or financial modeling, that kind of thing.
Exactly. Gate model computers, on the other hand, those are more general purpose. They can tackle a wider range of problems.
But I'm guessing they're also more complex to build.
Much more complex. D-Wave is essentially betting that both approaches will have a place in the future of quantum computing. It's kind of a hedge.
Makes sense.
Mhm.
Diversify, cover your bases. So let's talk money. What's their financial picture looking like these days?
All right, well, let's see. Their revenue for the 9 months ending September 30, 2024 was up 11% year over year. That brings them to $6.5 million.
11%. That's not too shabby, right?
It's not bad on the surface.
But,
There's always a but with these things, isn't there? They're still operating at a net loss.
uh-oh. How much of a loss are we talking about?
For the quarter, it was $22.7 million. For the 9 months, it's $57.8 million.
Yikes. That's not insignificant.
No, it's not. And to add to that, there's a going concern warning in their report.
Hold on, a going concern warning? That sounds serious.
It is pretty serious. Basically, it means there's a risk that the company might not be able to keep operating for the next year
Unless.
unless they can get more funding.
So, it's a bit of a tightrope walk for them right now. They're pushing the boundaries of technology, but struggling to stay afloat financially.
That's one way to put it.
So how are they addressing these financial challenges? Did they try to raise some cash?
They did. They secured a $50 million term loan.
$50 million? That's gotta help. Where'd that come from?
It was from PSPI, which is related to D-Wave's largest shareholder.
Interesting. So a bit of help from a friend, so to speak.
You could say that, but get this, that loan was actually fully repaid just after the reporting period ended.
Repaid already. That's a pretty quick turnaround. Maybe they're not in such dire straits after all.
It's hard to say for certain. It could just be a temporary fix. We'll have to dig deeper to figure that out.
All right, so we've got this loan, now repaid. What other funding strategies are they exploring?
Well, they've got a couple of equity financing options on the table. First, there's a purchase agreement with Lincoln Park Capital.
Okay, and what does that agreement entail?
It lets D-Wave sell up to $150 million in common stock.
Wow, $150 million, that's a significant sum. Is there a catch? There's got to be a catch.
Well, there's a floor price of $1 per share.
Meaning?
If D-Wave's share price drops below $1, they can't sell any more shares to Lincoln Park Capital.
So their ability to tap into this funding source is tied to their stock performance.
Exactly. No pressure, right.
Talk about a high-stakes game. What's the other equity strategy they're using?
They also have an at-the-market, or ATM, sales agreement.
ATM, like the cash machine.
Right.
What's that got to do with stock sales?
It's not quite the same as a cash machine, but it does give them some flexibility. This agreement is with a syndicate of agents, and it allows D-Wave to sell up to $100 million worth of stock.
So two different ways to raise money by selling stock. But wouldn't that dilute the ownership of their existing shareholders?
It would. It's a delicate balance. They need the capital, but don't want to upset their investors. And to add another layer of complexity, they've also had a recent issue with the New York Stock Exchange.
Oh, what happened there?
Their share price dipped below $1.
Uh-oh, that floor price again?
Right. That triggered a non-compliance warning from the NYSE.
That's not good.
They did manage to regain compliance, but maintaining it's going to be a challenge. It all hinges on their ability to improve their financial performance and, of course, boost that share price.
So it sounds like D-Wave is at a bit of a crossroads. They're leading the way in a revolutionary field, but facing significant financial hurdles.
It's a familiar story for pioneers, isn't it? The bleeding edge can be a tough place to be.
Let's dig a bit deeper into some of the specifics from their report. What jumped out at you when you first took a look?
Well, the shift in their revenue streams is pretty interesting. For the 9 months ending September 30th, 2024, QCAS brought in $5.071 million, while professional services generated $1.305 million.
So QCS is pulling in the big bucks now. Is that intentional?
It seems like a deliberate strategic shift. If we look at the same period in 2023, professional services actually outpaced QCS.
So they're putting more emphasis on building that stable, recurring revenue stream through QCS.
Exactly. Smart move, especially in their situation.
But can QCS alone carry them to profitability? I mean, given their current burn rate.
That's the million-dollar question. To
Right.
answer that, we need to take a closer look at their expenses. Where did that $57.8 million net loss for the 9 months actually go?
Okay, let's break it down. Let's look at those expenses. Where did the money go?
While the report breaks it down, research and development ate up $25,548,000. General and administrative expenses were $24,296,000. And then sales and marketing accounted for $11,237,000. So, it's across the board.
They're spending a lot on everything. R&D, I get it. It's a cutting-edge field. You got to innovate, right? But those general and administrative expenses, those seem pretty high.
Yeah, that's the cost of being a public company. All the regulatory stuff, compliance, reporting, it adds up.
Ah, so that's where some of that money goes. And what about sales and marketing? That's not a small amount either. What kind of challenges are they facing on that front?
I think the biggest challenge is that they're trying to market something that most people don't even understand. Like, try explaining quantum computing to someone who's never even used a computer.
Yeah, that's a tough one. It's like trying to sell smartphones before the internet existed.
Exactly. So they're not just selling a product, they're selling a vision of the future. And that's not easy, especially when you're also trying to keep the lights on.
Right. It all comes back to those financials. We were talking about that $50 million term loan from PSPI. It's been repaid now, but those terms were pretty interesting, weren't they?
They were. Remember, it was structured in 3 tranches, and the third tranche was contingent on them securing non-dilutive financing.
So even PSPI, which is related to D-Wave's largest shareholder, wanted some reassurance before handing over all the money.
Exactly. They wanted to see that D-Wave could attract funding from other sources. It just shows how important it is for them to diversify their funding.
Which brings us back to those equity financing strategies. The Lincoln Park agreement, that seems like a big opportunity. But that $1 floor price is a bit of a wild card.
It is. It could push them to focus on short-term gains in their stock price, maybe even at the expense of innovation.
And then the ATM agreement gives them more flexibility, but it also carries the risk of diluting shareholder value.
Exactly. It's a delicate balance.
Right.
Raise capital, keep shareholders happy, and, oh yeah, develop groundbreaking technology that could change the world.
No pressure, right? So out of all this, what do you think is the most important thing for D-Wave's future success?
I think their ability to handle these financial complexities is just as important as their technological progress.
It's a reminder that even the most groundbreaking technology can't escape the realities of business and finance.
Absolutely. And there's one thing in the report that I found particularly interesting.
What's that?
Remember how they repaid that $50 million loan just after the reporting period ended?
Yeah, it's kind of a surprise ending, wasn't it?
Exactly. I mean, think about it. It could be a really good sign. They managed to clear that debt. Maybe they had better cash flow than expected, or maybe they found some other source of financing.
So it buys them some time, gives them a bit more breathing room.
Right. And maybe it makes that going concern warning seem a little less scary. But, we still have to remember that $1 floor price on that Lincoln Park agreement.
Right, that's still looming over them. If they can't keep their share price above that, they lose access to that $150 million lifeline.
It just goes to show the tension between pushing boundaries and keeping investors happy. It's hard to innovate when you're constantly worried about the next quarter's earnings.
They need to show progress to appease investors, keep their stock price up. But that pressure can make it hard to focus on the long-term vision.
It's a tough situation, but it's not uncommon for companies trying to do something truly groundbreaking.
So big risks, big rewards, that's D-Wave in a nutshell, I guess. But they're not just a company. They represent a whole new way of thinking about computing.
Absolutely. And their success or failure could have major implications for the entire industry.
It's bigger than just one company, that's for sure. It's about the future of computing itself. So what do you think? Given everything we've discussed, how would you assess D-Wave's prospects?
It's hard to say for sure. There are a lot of factors at play.
Like what?
Well, they need to continue innovating, for one. And they need to prove that their technology can solve real-world problems. They need to build a case for why businesses should invest in quantum computing.
Show a return on investment, not just potential.
Right. And they need to navigate the financial markets carefully, balance raising capital with keeping shareholders happy.
And maybe most importantly, they need to tell their story effectively.
That's crucial. They need to inspire confidence in their vision.
So technology, finance, communication, they need to get all of those pieces right. It's a tall order.
It is, but the potential is huge. And that's
Ah.
what makes it so interesting.
Absolutely. It's a story that's still being written.
Yeah.
Okay, so as we wrap up this part of our deep dive, is there a question you'd like our listeners to consider?
Sure. Imagine you're an investor. What would be your biggest concern about D-Wave? And how would you weigh that concern against the company's potential to revolutionize computing?
That's a good one. Something to think about. We'll be back with the final part of our deep dive into D-Wave soon. It's a tough call, isn't it? Weighing the risks and the potential rewards. I mean, they're operating in a really competitive space. You've got those big players, Google, IBM, Microsoft, all making their own moves in quantum computing.
Oh, yeah, the competition is fierce. And you can't forget about all the startups popping up all over the place. It's a crowded field for sure.
So where does D-Wave fit into all of this? What sets them apart?
Well, one thing they've got going for them is that they were early to the game. They've been commercially available longer than most of their competitors.
So they've had a bit of a head start. But does that really matter in a field that's moving this fast?
It definitely helps. They've had more time to refine their technology, work with customers, and gather data.
Experience counts, right?
Exactly. But, there's also a potential downside to being the first mover. D-Wave's early focus was on annealing quantum computers.
And that was a good strategy at the time, right?
It was. But now, gate model computers are starting to look like they might be the dominant technology in the long run.
So it's kind of a gamble. They were betting on annealing, and now they're trying to catch up with gate model computers.
They're hedging their bets by developing both, like we
Yeah.
talked about earlier, but it's still a risky move.
Like trying to win two races at once.
Exactly. And it's not just about the hardware. They also need to convince developers and businesses to use their platform.
Build that ecosystem, that community.
Right. Make it easy to use, show people how it can solve their problems, and they have to do all of this while competing with companies that have way more money.
It's a classic underdog story, isn't it?
It is. And a lot of people are rooting for them. But that $1 floor price on that Lincoln Park agreement, that's still a big concern.
Yeah, it's like a ticking time bomb.
If their stock price drops below that, they lose access to a lot of potential funding.
It puts a lot of pressure on them to prioritize short-term gains over long-term strategy.
And that's dangerous. It can stifle innovation.
So they're caught in a bind. They need to show progress to keep investors happy and the stock price up, but that pressure can make it hard to focus on the big picture, the long-term vision.
It's a tough spot to be in.
It is. Well, we've covered a lot of ground today. Financial hurdles, technological challenges, competitive pressures. It's a complex landscape for D-Wave.
No doubt about it.
So after this deep dive, I'm curious to hear your final thoughts. Are you optimistic about D-Wave's chances of success?
I'd say I'm cautiously optimistic.
Cautiously.
Yeah, I really admire their ambition. They're not afraid to take risks, and they're pushing the boundaries of what's possible.
They're true pioneers.
They are. But I also recognize the challenges. The competition is tough, they're facing financial pressure, and the path to profitability is far from clear. It's a high-stakes game.
And a fascinating one to watch.
Absolutely. D-Wave's story is really a microcosm of what it takes to bring a disruptive technology to market. Their success or failure will have ripples throughout the tech industry.
It's bigger than just D-Wave. It's about the future of computing.
Exactly.
Well, that's about all the time we have for today. Thanks for joining us on this deep dive into the world of D-Wave Quantum Inc. It's a company and a technology that we'll definitely be keeping our eye on.